Today I had a conversation with Akarsh, who's been writing about Bitcoin and personal finance since 2017. We dove into multiple different topics. We talked about how layer twos are going to help the Bitcoin network, how mining has become more centralized and how this could be a problem in the future, and how real estate is going to suffer because of Bitcoin as a much better investment. I would strongly suggest watching all the way to the end because there's a lot of value in this episode. And if you want to, you can also skip through the topics. I've put the timestamps in the description below. Let's get started. We had a conversation just before we started this recording, and we discussed a little bit more about Michael Saylor and Saifedean Ammous's yield conversation. Can you give us your thoughts on that? Like, what do you think of that? I personally don't like Bitcoin yield, but I want your thoughts. What do you think?
Yeah, I think yield is a very fiat concept. I think the whole pursuit of yield is simply because the money that you're getting the yield on is devaluing. Thereby, if the money you had was not devaluing, why would you risk it? Why would you stake it for any reason at all? That's my take on it. But then again, I think this harps back to a little bit of a bigger context. I think what we're seeing in Bitcoin is the hypermaxi, right? I know people don't necessarily like that term, but the hypermaxi does not believe in the dollar as even existing after a certain amount after hyper Bitcoinization actually happened. But then there is the more tapered down version of a hypermaxi, which I think is what Saylor is, with his Wall Street hat on. The likes of Larry Fink might be in that group. But I think what they feel is that the dollar is going to remain, but it's simply going to be Bitcoin's just going to be worth a lot more dollars. So that's those two strands. I don't think will ever actually converge on the idea that there's going to be one single unique currency for the entire world. And I think that's where the difference stems from. I am a bit surprised when Saylor did say about the whole yield issue, because as he has himself shown with his MicroStrategy sort of game plan in the last 4 years, there's never, I mean, why would you ever need yield for MicroStrategy? Like, I just don't get it. Why would you? What would Saylor be willing to put his 2% of the Bitcoin supply onto a third party and take on the counterparty risk for 5% yield? I don't know. It sounds nuts to me, but I don't know, Rajat. Like, why would you want yield on your Bitcoin?
I think the main goal is like I try to discuss this on Twitter, but the main goal here is to make sure that you can own the asset and then at the same time delay gratification. Right? So they want to own they want to delay gratification at the same time as consuming immediately. So instant gratification plus delayed gratification. There's trade-offs for everything. So if you want to do something that gives you instant gratification, you give away your future benefits. So let's say going to the gym. You can either go to the gym, or in the same time you can, let's say, watch TV or read a book or something. You could do something, but there's a trade-off there. So either you're going to go to the gym or you're going to watch TV. I mean, of course, you have a massive amount of time during the day. You can do whatever you want to, but at the end of it, you choose one path or the other. But with the legacy financial system, I think the goal is to allow people to choose both paths, to make it go from a dilemma to something that they can pick both. So in a dilemma, you have to pick one or the other. With the legacy financial system, because money can be created out of thin air, because money is essentially energy in an abstract form, because energy can basically be produced out of thin air, I think the goal here is to allow people to not have to deal with opportunity costs. So that's what Michael Saylor is doing. So what Michael Saylor is doing by providing yield is he's allowing people to just hold Bitcoin and deal with the future benefits, but also earn some cash flow in the meantime. But the issue is, go ahead.
No, my question there was in what, and I believe, okay, so in what currency is your yield going to be paid in?
That's the thing. If he's saying it's going to be paid in Bitcoin, then that's different. If he's saying that it's being paid in US dollars, then that's completely different. But if they paid in US dollars, the issue is that Bitcoin's price is always going to be volatile.
Yeah.
It's always going to go up and down. If they paid in Bitcoin, the issue is in the future it's going to be worth so much more that the person that you're relying on to pay you back may not be able to pay you back.
Yeah. Exactly. So, and then therein lies the crux of it, because because you
Yes.
have the hard cap of 21 million anyway, right? Why would I give you something that is ultra scarce in return for the privilege of holding on to your Bitcoin? Because that's the
Yeah.
question. I mean, why? I understand the taking away, the need for taking away the opportunity cost. I get that,
Yeah.
but from a pure business model, why would I do that? Why would I do that as a lending institution?
That's the exactly that's exactly what I mean, right? When you in the legacy financial system, because money can be printed out of thin air, there's no opportunity costs.
Mm,
So he's thinking of it from that lens. He's thinking that we can trust JP Morgan, we can trust all these banks because
mm,
in the last 100 years they haven't defaulted.
mm.
But he's thinking of it from the wrong lens. They haven't
Yeah,
defaulted on a dollar system,
yeah,
but they could easily default on a Bitcoin system because
yeah.
if they lend out that Bitcoin, like you're saying, if if somebody's going to borrow Bitcoin from you, they're not just going to put it into their cold storage.
No, they're not.
They're going to sell it and they're going to spend it on maybe building a business,
Yeah,
or they're going to use that Bitcoin to do something with it. They're going to either gamble with it. They're going to do something. They're going to maybe give it to someone else who maybe they're willing to get. Maybe they're able to get 12% instead of giving you. They give you 10%. They get back 12%. Right. So
yeah,
there's that. I think the issue is that on a big scale, you can't do that.
yeah. I
People
agree.
won't be able to pay you back forever.
Yeah. And the hurdle rate, right? And this is the other question which I have.
Yes.
Again, when measuring it in US dollars, if you look at the CAGR for Bitcoin of the last, whatever, since 2020 at least, you're looking at a 45 to 50% compounded annual growth rate. And that, I believe, is your opportunity cost as for me. Because today it's like, hey, look, am I going to buy S&P 500? Am I going to put it in my pension? Am I going to buy a house? Or am I just going to buy Bitcoin and wait for 5 years? Because in a way, that's going to get me way. At the minute, that's it's a winning combination. So again, with if the cost of the money itself, the cost of capital is 50%. It's not 5%, which is the yield that Sailor wants to give out. So again, why would I take that third party counterparty risk in this case as well? It's it's
Yeah.
it's a very non-Sailor. It really irked me a bit when I heard that conversation between Saifuddin and Sailor, because obviously, look, Saifuddin's the OG, right? And as is Sailor, to be fair. I mean, nobody's done more for Bitcoin adoption, I think, than what Sailor has been doing. And him being such stringently anti sort of counterparty risk, to him to suggest this seems to me either something's at play with in something that we're not privy to is potentially happening behind the scenes, or this is Sailor's way of making sure that he doesn't upset anybody in the fiat world, the powers that be, as it were, because if you think about it, owning 1.5 or whatever it is percent of the Bitcoin supply, he's going to be ridiculously wealthy in about 20 years' time. I mean, and people are going to come looking for him, right? So maybe this way he's kind of playing the longer game, and he's like, hey, look, I've got to keep everyone happy. I'm not looking for confrontation. I'm just looking for a way to keep both the U.S. government and the Bitcoiners happy.
Yeah, those are some really good points. I agree with you. Maybe he was thinking of it from the wrong time horizon, wrong
Mm.
perspective of maybe Saifuddin's thinking in the short term, because in the short term you probably shouldn't be asking for yield on your Bitcoin. If you're
No.
asking for if you're asking for yield, you're looking to go bankrupt,
Well, look what happened to
right?
Celsius. Look what happened to FTX.
Exactly.
There's countless examples of this.
And it'll keep happening. It'll keep happening until people figure it out, until people really realize that yield is a fiat thing. It's
Yeah.
a way of making money in a system where you can keep printing more and more money. On a Bitcoin standard, you can't do that because at some point there's going to be a failure
Mm.
where there's going to be a business that makes a bad decision that ends
Mhm.
up taking a loss and they're not going to be able to pay you back. And the chain of the entire chain of custody is going to be disrupted. Whoever holds
Agreed.
that Bitcoin at the end, they're going to be a lot richer, and everybody else who is part of that chain is going to be poor. So let's say if Coinbase lends Bitcoin, if they say, "Oh, we're going to make 5% yields," and they lend it to Walmart, and
Mm.
now Walmart can't pay them back in 20 years because Walmart can't get cheap labor.
Mhm.
They lost their Bitcoin. Their Bitcoin
Yeah.
is gone, but they expected 5% easy yields. We should be able to make 5% from Walmart. They've been around for 50 to 100 years, but
Yeah.
on a Bitcoin standard, nobody's too big to fail. Everybody
Agreed.
can fail. If you make dumb decisions, you will fail. If you lend your Bitcoin for 5% yields, you're gonna fail.
Yeah.
If somebody along that chain of custody, wherever that Bitcoin is being used,
Yeah.
if they fail, you fail as well. And most businesses do fail. So
I think an interesting question for you would be if your yield was given to you in Bitcoin, right? What percentage yield do you want to achieve to give your Bitcoin to a third party?
at this point, I wouldn't give it away.
Never.
I don't think I don't think I would give it away at all because most people don't understand what it is. Most people who are overly confident are probably going to lend this Bitcoin to someone, and then they're probably thinking, "Oh, my government will
Bail me
back
out.
me up.
Yeah.
They'll bail me out."
Yeah.
But that's not
Yeah.
going to happen anymore. That doesn't happen on a Bitcoin standard. So I wouldn't lend it to anyone at any yield. I think that kind of carries us into the covered calls. So I don't know if
Yeah.
you said that you don't know too much about the covered calls, but essentially what they are is you hold a certain amount of Bitcoin
Mm-hmm.
and then you sell a call. You sell it to someone. Do you know how calls work?
I do.
Price
Yeah.
goes up.
Yeah. Yeah.
Yes. So what do you think the risk of that is? I think I've had a lot of conversations with people thinking, "Oh, no, Bitcoin's not going to go up 100% overnight. It's not going to go up 100% over a weekend. It
Yeah.
can't. It's not.
Yeah.
I'll have stop losses." And but they I think they don't realize that Bitcoin is trading 24/7 while legacy markets like IBIT is trading 9:30 to
Nine to
4.
five. Yeah. 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 Yeah.
Yeah.
No, exactly. And I think the flip side of it, because I've done something similar where I've taken on a collateralized debt against my Bitcoin, right? And I gave it to a third party. I only did it as a trial because I wanted to get an iPhone about 4 years ago, and I had a choice. I had, look, I'm going to put £2,000. I have £2,000 worth of Bitcoin, and the iPhone costs £1,000. Am I going to sell my Bitcoin, half of it, and buy the iPhone, or put it into Nexo, who was the platform I was using then? They gave me a 50% LTV directly
Wow.
straight into my GBP account, right? Which was all fine until I realized on a Saturday morning at 2 a.m. when I could be fast asleep and the Bitcoin price crashes by 50%, which it could, my collateral's gone, right? So and I think what you're talking about, well, if people don't think it can go up 100% overnight, then we know it's gone 50% down overnight. Like that has happened multiple times. So yeah, I mean, like it's the exposure of that risk, I think, is so severe. It just comes like it looked to me as if it was free money because on a long enough time horizon, Bitcoin's definitely going to go up. So it doesn't matter because nobody's looking. It's not nobody's looking for me to pay the interest on the loan or anything like that. But because it's mark to market, you see, that's the key. The mark to market will kill you because Bitcoin will kill you in the short term. You got to be prepared for it. And if I put all my savings into Bitcoin and I've collateralized it and I'm taking a debt against it and I'm living off that debt, 2 a.m. on a Saturday morning, that could go to zero. What do I do then? Right.
And your
So
Bitcoin's
yeah,
gone forever.
yeah,
You're never going to get it back. I
no,
think the legacy traders, they think, "Oh, we own 100 shares of Amazon.
yeah,
Amazon goes up 5, 10, 15% a year. I'll just buy a call. I'll sell a call with a strike 20% above the current price. Never going to happen. We'll be good. Don't worry. I'll be safe. I'm earning this 20% or 10% yield every
yeah,
month. It's
yeah,
worth it." But I
yeah.
think they're going to end up just losing everything because if keep in mind, I was doing the calculation, and
Mm-hmm,
if let's say you have a strike 20% above the current price, and then overnight Bitcoin's price rises 100%,
mm-hmm.
you're going to get back the strike plus 20%, right? So let's say
Okay,
the strike is okay. So right now, the IBIT is at $36 or something, $35.
right.
Let's say you give a strike at $42,
Mm-hmm,
and then Bitcoin's price suddenly goes up 100%, and IBIT's price goes to $70.
mm-hmm.
You have to buy back. You get back 40% less Bitcoin.
Yeah. Jesus.
It, it's not
Yeah.
even worth it. Why would you
No.
do that? If something could happen overnight, you lose
Yeah.
everything. Like you
So
lose
when
every.
are the options coming live? Are they live?
I don't know yet. I haven't looked at that. I don't think they're live yet.
Yeah.
But maybe we can do a quick Google search here.
Yeah.
Um, when will Bitcoin options go live? IBIT options. Let's see. Okay, it says they're approved. I don't see anything saying when they'll go live. Oh, it says after approval, investors will likely soon be able to trade options. I don't think they're approved yet, so maybe in the next month. I don't know, maybe sooner than that, but let's
Yeah,
see.
yeah,
I think that's going to be a game changer though, because people are going to buy a lot of Bitcoin to sell covered calls,
yeah. Understood. Yeah,
right?
yeah.
And then
Interesting.
once that happens, I think it's going to be game over for a lot of retail investors.
Yeah, yeah. So buy it while you can, really.
That's it.
Back.
That's honestly it. I think most retail investors aren't seeing where this is going, and they're gonna make a lot of bad decisions. But let's see what happens.
Yeah,
Okay, I wanted to talk to you about another topic. You were telling me before we had our conversation about mining centralization.
yeah,
Can we go into
yeah,
that? I think my audience would love to learn about that and know what's happening.
yeah. Do you mine? Just out of curiosity, have you ever mined Bitcoin? You
No.
haven't? Okay. So I used to do it a lot. I used to use a platform called NiceHash. This was back when some of the shitcoins were proof of work, right? If you remember, Ethereum switched over, right? Anyway, I'm not a big fan of any of them, but the reason was NiceHash. The way it works is you use a GPU, because obviously I didn't have the budget for an ASIC at that time. What I did was I got a GPU and an NVIDIA something, stuck it in, it just mined away. It would actually mine Ethereum, but the payout would be in Bitcoin, right?
Oh,
All of that was so. I mean, for me, it was like I want Bitcoin or nothing else, and I didn't really care at that point what the energy was used for. I was a little bit, I didn't fully understood Bitcoin at that point. But look, I mean, I was looking at it as, hey, I get a free, or not a free, but like I used to get a Bitcoin payout to me every day into my wallet. Okay, I can live with that. That kept going on, and then Bitcoin, and then Ethereum switched to proof of stake, and none of that. You couldn't mine it anymore. So all of my hardware was worthless. That was sort of 4 or 5 years ago, right? And now, recently, since I've moved to a new place, I have a young baby as well, and I'm at home a lot of the time, and it's about to be winter, and I'm like, maybe I can set up a weird, tiny little mining machine, which you can get like a bit axe for about $200 now, which is great. It gives you decent efficiency as well. So anyway, I set it up, and the first thing you have to do when you set up is to choose a mining pool, right? If you don't choose a mining pool, what happens is you don't get any payout until you hit a block, right? And the odds of you hitting a block are, I mean, it's ridiculously low. It's like it's a lottery.
because
So
there's so
if
much
you didn't,
competition.
yeah. So if you don't mine Bitcoin, oh sorry, if you don't get a block while mining Bitcoin, you don't get any payout for your mining, right? So why would you mine? Question number one, right? Why would you do it? The reason you do it is to get some cash flow in Bitcoin or dollars or whatever it is that you need to keep your business running. And the way to do that is to join mining pools. Mining pools are basically like, they are a set of any of these individual miners can combine to form a mining pool. The mining pool has a combined hash rate, and at any given time, they have a higher chance of getting a block because they have 100x the amount of hashing power you have. Um, so anyways, as a result, a lot of people end up joining them. By default, absolutely everyone I know that mines Bitcoin mines in a mining pool. There's only about 6 of these mining pools. 6 mining pools for pretty much all of the Bitcoin that's being mined. Unless you're mining, for the block reward, which most people can't because they don't have that hardware. So this is leading to these 6 essentially companies. I mean, I don't even know if they're companies or entities. Some of them seem to be run by the same people, right? And they just appear to you as if they are multiple, but they're actually one. So it's very hazy, this world of this under the hood, what's happening in the mining thing. And I think if you follow a guy called Bitcoin Mechanic who does YouTube videos, he is excellent at the technical stuff. And one of his biggest concerns, he said, was these 6 miners essentially effectively controlling the supply of the Bitcoin, right? And what can you do to stop it? You have to run your own mine for free, or at least until you get lucky and hit a block reward. So that's changed the incentive structure to what I thought Bitcoin was. And I'm looking at this thinking, but what about all the big miners? What are they doing? They're okay. If they only run the block reward or base this on the block rewards, that's fine, right? You and I don't get affected by it. But the whole ethos of Bitcoin was decentralization, right? It's about you and I running our own node and mining our own coin and being away like in this parallel sort of system. But that's slowly ebbing away, and it's only going to get harder because difficulty is going to go up, the hardware you need is going to go up, energy prices are going to go up. So I think this is just leading to this soft centralization of the supply. And I think I'd love to know your thoughts on that, Ashley. What do you think?
Okay, so that's a lot of information. So the mining, of course, you have to join a pool unless you don't want to get a reward. That's key. That's important. But I think one of the things that I've kind of thought about maybe 10 years from now, maybe even a few years, maybe I mean a lot of countries are actually starting to mine now. But I think what countries are going to do is they're going to mine Bitcoin even if it's at a loss. Because let's say Russia, for example, if Russia, okay, this isn't short term. I mean, they're already doing it. Actually, they're already starting to mine. But even if it is at a loss, I don't think they care because this is more about political moves, right? So let's say mining is centralized somewhere in the U.S. and there's the U.S. can basically take control of all those miners, the mining pool. But I mean, of course, people can disconnect from the mining pool. But who knows? Maybe the U.S. is pulling the strings in the background, and something happens where they can start blocking addresses associated with the US, with the Russian government, or with China, with India, with whoever, Brazil, anyone in BRICS, for example. And they start doing this. Don't you think that those countries would have thought of this?
Yeah, they would have,
right?
Yes.
That's how I think of it. So the way that I see it, I think this is maybe a short-term issue, but then I think the bigger thing here is that we don't know who the mining pools are controlled by.
Exactly.
Right?
We don't.
Go ahead.
No. I was just going to say that. No, exactly that, right? And I think I'm looking at this from a pleb's perspective because remember, like the whole point of Bitcoin is for the pleb. It's not actually for public listed companies doing terahash of mining, right? I mean, look, it's great that they're doing it, and it's great for the security of the network. But they should have no greater power over Bitcoin than a pleb. A pleb needs to pay his electricity bills at some point, right? Because of that need, I literally don't have a choice now. I'm going to have to join a mining. I can't really simply just wait or not mine Bitcoin. I guess that's the other option, right? But then if I don't do if plebs around the world don't start mining Bitcoin, it's only the big companies that are mining it, and that's another form of centralization, is it not?
I don't think that's centralization, to be honest. Because if you think about it, every single country can run their own rigs, and they're going to work for themselves. They're not going to work with other countries. So let's say just the top, let's say the big four: Russia, China, India, and the US. Russia doesn't trust China. Russia doesn't trust India. Russia doesn't trust the US. Not deep in their hearts, they don't trust each other, of course, because they have their own land and they want to maintain that land, and they want to make sure that they have control of that land forever. But I think what's going to happen in the future, right now it's land, but in the coming years, coming decade, people are going to think the same way about Bitcoin. We have armies that protect our land. We have missiles. We have weaponry to protect all of our land.
But it's proof of war. Yeah,
exactly, right. With Bitcoin, it's mining equipment. That's your army. And on top of this, of course, the equipment that's being used slowly becomes obsolete. So the people who are mining, eventually they won't get big enough rewards to pay for their bills, and they'll give up. But then what's going to happen is new people who are newly joining, are going to be able to buy with so much less money. They're going to be able to get much better hardware, and that's going to become more and more widely used. People are going to. I think a lot of people think of it as might eventually think of it as a lottery, right? As equipment just becomes more and more efficient. If anything, the price of energy is actually dropping because we're getting better at producing energy. So I don't think those are problems over the long term. Maybe in the short term, maybe some transactions get censored. Maybe somebody gets their transactions blocked. But eventually what's going to happen is, let's say one pool stops a transaction, another one will eventually pick that transaction up, right? Eventually that'll happen. And then the person who's transaction keeps getting stopped, they can pay a bigger and bigger transaction fee. And now it becomes a bounty for the entire world. Who's going to connect their miner and who's going to approve this transaction fee? So I think there could be some centralization. I think one of the things so I was actually listening to Bitcoin Mechanic when he was on with Natalie Brunel. So he was saying how some miners, they offer you a fixed reward no matter what.
Correct. Yeah.
And I don't think that's sustainable. Unless it's so much lower than whatever the market rate is, whatever the amount they should be getting is, I don't think that's sustainable because more and more people are going to figure out, why can't I just go to this other mining pool? That's competition right there as well. And the cap of that competition is giving out all of your rewards.
Yeah.
Right.
Yeah.
So
good.
I think the centralization is not as big of a problem as people think. And then, of course, the obsolescence of equipment is going to keep moving power around from person to person, from company to company, from business to business. And right now, maybe mining is profitable, but let's say Russia, for example, they start mining. They have so much oil. Instead of selling their oil and gas to other countries, they just start connecting the mining equipment to it.
Yeah.
And that mining equipment gets so powerful that they have a massive share of it. Now China has to buy some. Now India has to buy some. Now the US has to buy some. So I don't think that's a valid argument that could maybe stop Bitcoin.
Okay. Yeah. No, fair enough. Fair enough. I mean, yeah.
I do think it's something to look into, though. I do think. I mean, I think the game theory
it's just one of those things that I came across very recently, to be honest. Again, on the same podcast with Nat Brunel when Bitcoin Mechanic was mentioning them, and I was thinking, yeah, I've kind of taken this stuff for granted. I've kind of assumed layer one, as in the underlying layer, the under the hood of Bitcoin, is working absolutely fine. It really gave me an understanding of how hard these guys are working to actually just keep that ethos going, right? And I think that's the sexy pleb movement, right? That's what originally drew me into Bitcoin. And it's like we're kind of getting a bit lost in the whole ETFs and the salarization of it, but like down and below, like at the ground level, at the foundation, you still have these cyber hornets working away, and I think that's brilliant. So yeah, hopefully it doesn't spell the end of centralization, but I think you've outlined why I might be overthinking it. Yeah.
But I think it's important to think about these things, though, because that's how you innovate. That's how you think about their aspects of this. That's how you think about how powerful it is.
Yeah.
That's how you think about how this can protect itself. Why so many people are putting billions of dollars into this.
Yeah.
It's not just because they think it's going to go to zero. They've thought of this, right? And just having these conversations, it helped me think. Like the using computers as weaponry. I mean, I know what's his name, the
Jason
software
Lowry.
book.
Yeah.
Yes.
Jason Lowry software. Yeah, I've actually just ordered that. I haven't read it, but yeah.
Amazing.
Really,
but that's the thing. Once you see that aspect of things, once you see that energy is whoever controls the energy essentially controls the entire world.
Yeah.
And right now the system is designed to allow the US to control the entire world's energy. So who do you think is going to push back on that? I think once you see it from that perspective, it changes things. Maybe I need to dive a little bit deeper into this as well. I mean, this is a really important topic, and these kinds of conversations really teach you, oh, this is where it's going, this is where it could go in the future, all that. So you've been writing your blog for what, 6 years?
Yeah, about 6 years now. Yeah.
What's a topic that you really think people should know about?
Yeah, I think the fundamental. So again, it started off as a personal finance blog, right? It was literally how to manage your expenses, sort of thing. Quite boring initially, and then I discovered Bitcoin. I fell in love with Bitcoin, and just the more and more, the rabbit hole, right? So I was deep into it. But I think the one big takeaway, and the thing that really shook me about Bitcoin is how it bridges the gap between reality, right, the real world, energy, and computation, right? It's really weird to think that something you are doing in the real world physically, right, can be stored in a computer network, and that becomes money, right? I mean, it's a ridiculous idea.
It is.
It's a crazy idea, and that always gets me, because I was like, because if you think of something like religion, for example, right? Religion has a lot of following, right? There's loads of plebs of religion globally. Every religion's got it. everyone has a book, everyone a protocol, for example, right? Everyone's got their version of a book that they follow. Everyone's got meetups, everyone's got conferences, the whole lot. Exactly like very similar to what Bitcoin is, right? And a lot of people in the fiat world don't get this idea because they think Bitcoin is simply made up. I've heard this so many times. But it's just made up. How can you believe something that's made up? I can do it, is what they say. They can't, is the reality, because, I mean, if they could, they would have. They haven't. So never mind that. But the link that religion is missing, that Bitcoin does have, is this direct proof of reality and energy. It's right there. Anybody can go and check it. None of the religions, for example, like I'm not outing myself as an atheist or anything like that, but all I just want to say is that none of the you can have all the belief you want, but if you don't have anything tying it back to reality, all it is just a belief. But Bitcoin isn't that, right? Bitcoin is actual reality, and I think that took me so long to get. I just couldn't get it. It took me forever to understand that very basic concept, and then to actually make that into a large scale network which just runs independently without you doing anything. That's magic. I mean, that's as close to
Yeah.
magic as you can get. You know?
Oh yeah, absolutely. I think I like to think that with a lot of religions,
Yeah.
I'm okay. I'm okay with people believing that, oh, this is right, this is wrong. Perfectly fine. I'm not an atheist. The way that I think of it is religion just helps people get together.
Mm.
It helps them create groups that believe the same thing, and that's
Yeah.
perfectly fine. It's almost, in a way, it's almost like a social club,
Yeah.
right?
It is.
These people
Yeah.
have something to relate on, and that's perfectly fine. But I think one of the issues with religion is that people put too much weight on it. So, for example, there are people who are a certain religion, they may be trying to kill people of another religion,
Yeah.
right? There may be people who have no religion or don't care, they have no morals.
Yeah.
They try to take advantage of people who do have morals. And see, that's a problem as well, because the people who the people who have morals are easily taken advantage of because they trust this other person. And I think fiat is a religion.
Yeah.
I think
Agreed.
that's a key. Fiat is a religion. I think with
I think,
a lot of
sorry to
religions,
cut across here, anything that has a really strong belief system, right?
yes,
Irrespective of how many of our followers they may have, if it does not tie to reality in any way,
yes,
it's a de facto religion. I mean, because
yes,
it's a belief system, right? I mean, that's what religion is, really. It's a belief system. There is no tying down to reality. Bitcoin is not a belief system. Whether you believe in Bitcoin or you don't believe in Bitcoin, it's still TikTok next block, yeah?
yeah,
You don't have to do anything to it. It's still going to
that's
work, right? And therein, like, and then you as a non-believer of Bitcoin can log into it and look at the blockchain and look, oh my God, that actually happened. You can't do that with any with any other belief system.
and I think one of the things the with fiat being a religion is that with fiat currencies, if you question it, you get pushback
Yeah,
from people who
it's a
don't
great
actually
point. Yeah,
understand it. They believe that it's true, so they give you pushback. And with this belief system, there are people who are taking advantage of the people at the bottom, the people who believe in it, people who understand the reality are taking advantage of the people at the bottom. But with Bitcoin, that's not possible.
yeah.
Everybody has the same access to the same knowledge.
Mm.
Everybody can look at the same information. So one website that really got me to think about this was Mempool.
Mm.
Exactly like what you're saying. Once you see it,
Yeah,
it's undeniable. You can't
it
deny it
is
anymore
undeniable. Yeah, yeah,
because it's real. And I like to say, I kind of say it to mess around with people on Twitter, but I like to say real estate is a religion, right? Because you can show real estate investors charts, you can show them the fact that there's this much money been printed in the last however long,
yeah,
and they'll always deny it. They'll
yeah,
always tell you, no, real estate's still going up. It's going up forever. You can tell them the supply of real estate can be increased at will. Dubai created land. They created beachfront property,
yeah,
but they're always denying it. They
yeah,
think, no, that's not possible. It's like if you were to, let's say, if in New York,
yeah,
the only thing that's constraining the supply of real estate are laws.
yeah.
There are certain bills that don't allow you to build higher.
That's it.
There are
Yeah, and those
certain
laws can be changed. I mean, that's not. Yeah,
exactly right,
it's not. It's not even. Doesn't even need a consensus mechanism to change those laws.
Right. And let's say somebody starts building 100 floor buildings.
Yeah.
How much will that drop the value of the building that's right next to it with
Yeah.
that great view, but now it doesn't have that view?
Yeah. Yeah. No,
Those are the
exactly. I
risks
mean,
we take.
and there's 2 points to that as well, and that's the whole fiat mindset, right? I think if you look at the fiat mindset and you look at the increase in the number of apartments, there's definitely a correlation there, right? There
Yeah.
has to be, because what else can you do? The land is scarce, right? According to, I mean, literally land on the planet outside the ocean is scarce,
Yes.
right? What happens when demand meets incredible scarcity? I mean, undeniable scarcity. Scarcity. You just have to
Yeah.
build more. How do you build more? You can't build more without land, right? Let's go higher. And they
Yeah.
have. That's all they can
It's
do. There's no other dimension you can grow in.
that's exactly what they can build higher. They can. It's like layer twos on the Bitcoin
Yeah,
network. If you want to lower
exactly.
transaction fees, you build layer twos.
Yeah.
The base layer has to get so expensive that it
Hmm.
becomes very beneficial for people to build layer twos and slightly give you a lower fee. And
Yeah,
that's going to add up. That's going to build the best layer twos. That's what capitalism is,
exactly. No,
right?
absolutely. Yeah.
And then that's going to lead to more competition. That's going to lead to more people wanting to build their own layer twos and charging their own fees. Who knows? Maybe some of the cryptocurrencies that are available today, maybe they become layer
A
twos.
layer two.
Maybe
Yeah.
they get so trusted. Maybe they build such a great network
Yeah.
that they become the best layer two in the world. I'm
Yeah.
not saying that's going to happen. I'm not saying that you should sell your Bitcoin to buy some random altcoin that somebody's telling you that you should buy. But
Yeah.
who knows? Maybe that's where the world is going. Maybe, like, for example, not sure if I mean I think I just completely derailed the conversation about
No, no, that's all
religion.
right.
But so let's say Caspa. A lot of people talk about Caspa. They talk about Nano. They talk about all these random cryptocurrencies.
Yeah.
They say, oh, this is better for payments. This is that. I don't think it can replace Bitcoin ever, but we
Yeah.
don't know if it'll become a layer two. And then again, let's go back to the religion conversation here. Um, that's where the reality comes in. That's where
Mm,
capitalism comes in. That's where people start dedicating their energy towards something that makes life cheaper for anybody who wants to transact with Bitcoin.
agreed.
Thoughts?
Yeah. Yeah. No, absolutely. And I never looked at it that way, actually. I really like the way you phrased that, because I think altcoins, I think you just outlined the best possible case for a shitcoin is to become, at best, a competitor to something like Liquid or Lightning. At best,
Yes.
right? You're never gonna, what's that thing from the wire? When you come at the king, you best don't miss, sort of thing.
Oh yes, yeah, yeah.
Yeah,
That's something like
because
that.
you
Yeah.
can't. Well, I mean, how are you gonna dislodge the foundation that ties
Yes.
Bitcoin to reality? You can't with a shitcoin. You can't with something that you've just made up again, right? Yes, you'll have proof of work, and if you do, if you really like, and Saylor's point in this is excellent. I think he talks about how Bitcoin is the bedrock of Manhattan. Have you heard him say that?
Yes,
when
I
he's
have.
when he's like, you're buying the prime real estate in Manhattan, and why would you not? And of course, why would you not? But more importantly, his point is, how often does the floor of Manhattan move? Right? It doesn't, because it's
Yeah.
literally built with like granite, right? It's there to stay, and that's all it's there to do. Which is why when you talk about, oh my God, that's going to be a faster transaction on Bitcoin, it takes too long. The whole point of Bitcoin, as an asset at least, you don't have to move your asset. It's got to remain steadfast and strong and unbreakable. That's those are the criteria you design for, not oh, let's move Bitcoin from A to B and make it happen in a second, right? And
Yeah.
that's where you have the whole network architecture. That's why you need a layer two. And that's why I think there may be a lot of layer two competition, and great, fine. For people who want to use Bitcoin for whatever it is that they want to use it for, maybe layer two is your solution. Great, go for it. I'm keeping my life savings in Bitcoin. The last thing I want is to be able to move that to somebody else across the world in half a second. I don't need that, you know?
If you need to, you can use Visa. You can use Mastercard.
Exactly.
They already
Exactly.
have those networks. If anything, maybe Visa and Mastercard are the ones that are building the next layer two. Maybe BlackRock is the one that builds the layer two because
Yeah.
so many people will own their ETF and
Hmm.
there will be merchants within there. There will be people who are customers within there that are willing to trade their Bitcoin. Maybe somebody wants to buy their Bitcoin from someone else. BlackRock has 360,000 Bitcoin of people's, and
Yeah.
they can literally onboard everybody on Earth.
Yeah.
And BlackRock doesn't want to ruin their reputation,
No.
right? Larry
Yeah.
Fink is not going to come out and I mean, who knows if something happens? I can't tell you what is in his mind, but who knows, maybe this could be the future, because there's already so how many people trust BlackRock. They have $10 trillion of assets under management already.
Mm-hmm.
$10 trillion of global assets. If that goes into Bitcoin, they have the biggest network in the world.
Yeah.
Well, after the base layer, of course.
Of course, yeah. Yeah, no, it's interesting.
Right?
Like it's really interesting. It kind of puts so much things into perspective for me, to be honest. And I rather always, given a choice, hold as little of the base layer as I possibly can, rather than having almost everything of the higher layers, right? So the reason I'm saying so, again, going back to my actual career as a network engineer, right? So we learned something called in grad school, something called the OSI model, right? Basically talks about layers, okay? So when you talk about a mobile phone, me calling you, for example, the base layer of that communication is the air. It's called the physical layer. The physical layer used to be wired, it's now wireless, right? And you have something like Facebook, for example, or Instagram or whatever. Those are apps which are on the highest possible layer, right? So there's a semantic gap between each of those layers. You do the physical stuff on this layer, you do the transport stuff on the layer above that, you do the networking above that, and then to make it really cool, gooey, you do that on the app layer, right?
Oh, the user interface.
That's the structure of any network, right? When you talk about the internet, like the TCP/IP, which is a protocol, it actually runs on what's called the transport layer. It doesn't run on the physical layer. There's nothing happening in the air between you and I that is specific to the internet. It's just the air is the air, right? So I think having that layered approach is what allows things to build at scale, to be engineered at scale. And Bitcoin, I don't even know if Satoshi's original vision ever incorporated a layer 2. I don't know. All right, I'm not sure. I haven't read it about it. I haven't looked into it much. But just having a physical layer with a predefined protocol defined and reinforced by proof of work, that itself gives you the monetary network. Unlike a Visa, for example, Visa, again, you can make an argument is a layer 2 of the USD, right?
It is, yeah.
So by Visa by itself has value as a company, as by providing and managing and optimizing that network. They don't produce their own money, right?
Yeah.
Now compare that to an
I think
altcoin.
Visa. I think Visa would be a layer 3 because Visa goes through banks. Oh, so the Federal Reserve. Then there's banks, regional banks.
Yeah.
Then there's Visa. Visa contracts with the regional banks. They don't contract with the Federal Reserve. But I think that even Visa is a layer on top. So when people compare Visa with Bitcoin, it makes no sense.
Yeah, it makes no sense. And when people say like Ethereum is money, right? But that's like saying Visa is money. It's not actually, because how could it be? It actually breaks that very simple layer model.
Can you explain that? Why would you say that? I don't personally like Ethereum, but I just want to be more convicted in not liking Ethereum. So can you explain that part?
So I mean, I don't like Ethereum at all. Or anything that's not Bitcoin is just not like it doesn't. But it's the same problem with Ethereum. Ethereum's entirely so again. There's no scarcity, right? We don't know how many coins there are. They've changed the blockchain in the past, and they can do it again in the future. It's proof of stake, right? Besides these three big reasons, there's also another reason, which is if Ethereum was money, then it wouldn't need a second layer. Ethereum is effectively a layer 2. The layer 2 of Ethereum, layer 2 of Bitcoin is similar to layer 1 and layer 2 of Ethereum. They're just combined together into one single stack. All it means is we can move Ether from A to B for gas fees, okay, which is another concept within the Etherland. So you own both the network and the asset, similar to how Bitcoin is structured, right? But Bitcoin, like I said, with the grounding to reality, that's money. But when it comes to Ethereum, you're owning both the network and the ability to move the money on that network through proof of stake, and you call that whole system as money. See what I mean?
Oh, okay. So in Bitcoin, the currency and the network are separate.
Yeah, but they're just called Bitcoin. Both of them are called Bitcoin.
They're called
right?
Okay. So on Ethereum, if you own the currency, you also own the network. Like they're one piece. Is that
if you own enough of it, you can, because it's proof of stake.
Oh, right. You can, because you can generate yield essentially
on your Ether.
Oh, right. Okay. So if you
and
own
you get paid the gas fees.
Yes. So if you own what 32 Ethereum,
I think I can't remember the number, but yeah,
I think
something
it's
like that.
32. You can run a validator. Is that what you're referring
Yeah,
to?
I think yeah, exactly.
Okay.
I don't know
So
the
the richer
exact
you
number. I
are,
think that's changed.
okay, it has a change. Okay. So
Yeah,
the
I
richer
think
you are, essentially, the more likely it is that you can influence the network.
well, exactly like the fiat system.
Right. So
Exactly like that.
If Michael Saylor were to own a ton of a ton of Ethereum, he could
Yeah.
essentially influence the rules of the network.
Yeah. So how do you think they went from going from a pure proof of work system to a proof of stake system within about
The wealthy.
yeah. In the one shot, it was one update to the software.
Yeah.
Imagine doing that with Bitcoin. You can't I mean, how can you? How can
So
Bitcoin move to a proof of stake?
just completely off topic. Do you think that is Ethereum Classic still proof of work?
I don't know. I don't know.
No.
I can't tell you.
So,
Yeah.
so do you think it's possible that the proof of work fork of Ethereum could? Because I'm just looking at the what's it called? There's this website called Ultrasound Money. I'll just share my screen here, so you can see here the supply of Ethereum.
Mm-hmm.
It's skyrocketing.
Wow.
This is where the merge happened.
Yeah.
Sorry, this is where the merge happened right here. It dropped
2022.
for quite a
Right.
bit because this was I think it was because Ethereum was going up in price. People are using it a lot. Maybe I don't know why, but the supply was dropping, and
Mm-hmm.
then the supply starts going up,
Mm-hmm.
and it's shooting straight up.
Mm-hmm.
And what I'm seeing is that it's because there are people who are transacting more on Ethereum layer twos, I guess,
Mm-hmm.
Polygon
Mm-hmm.
or something, some other coins, and instead of using Ethereum because Ethereum supply decreases when people use it,
Mm.
they're not using Ethereum, and now the supply is not being cut down. So it's basically
Yeah,
so.
because
And then
they burn the ETH or something, don't they, at the end of the
yes,
transaction? Yeah.
I think something like that. They burn a little bit of it, but I think something else is that when they approved Ethereum ETFs.
Yeah.
Ethereum ETFs are only going to hold. They're not going to spend.
How do you mean?
So
Oh, right.
sorry.
Okay. Right. I
Yeah, so
get you.
they're
Okay.
not going to spend their Ethereum. They're going to just hold it. They're
Yeah.
not going to buy some NFTs, right?
Yeah.
They're just going to keep the Ethereum. So what this is going to do is, as more of the Ethereum is held by these ETFs, the faster the rate of production increases because less is being burned.
Yeah.
Does that make
Yeah.
sense?
It does make sense to me. Yeah.
Right? And doesn't that
But
break Ethereum?
yeah, but so there is no fixed capital then, yeah?
From what I know, no, there isn't.
Right. So they can create infinite number of ETHs.
I think so. I think that's what it. I saw this tweet that said there's no limit. That's crazy. See,
And then
go ahead.
yeah, you're from the financial background. You probably know more about this than me, but there's something called the Howey test, isn't there, for the SEC?
Yes.
Can you explain to me in simple layman's terms how Ethereum can pass the Howey test to be okayed by the SEC to be in an ETF?
I think I've probably forgotten more about the Howey test than I remember, but essentially, I think they were saying something about how I did some deep research on the Howey test just to see what's going on, but
Yeah.
it's something like the company can't have an influence on the price of the asset or something like that. Let me just Google it. Howey test.
Yeah.
I'll Google it and then I'll just share my
Because it's a
screen so that people can
security
read.
by all for I mean it's got a CEO, right?
Yes. Okay, so here it is, Howey test. I'll just zoom in. Okay, so the Howey test is a legal framework outlined by the U.S. Supreme Court to determine whether a transaction qualifies as an investment contract and should be regulated. Lists 4 criteria: an investment of money, expectation of profit, common enterprise, and reliance on the efforts of others. So Ethereum would fail this
Yeah.
because the miners are sorry, not the miners, the validators.
Yeah.
They own Ethereum and they can buy more. They can invest into this token. And then they can support the network, earn transaction fees by supporting the network, and they're
Mm-hmm.
expecting profits.
Mm-hmm.
It's a common enterprise, so I guess a bunch of people can come together. But I mean, wouldn't. I guess that's different from Bitcoin because Bitcoin is it's separate. The coin is separate from the network.
Yeah. Yeah,
Reliance
because
on
I could be wrong, but I thought you needed to pass the Howey test for the SEC to actually allow you to be traded as an ETF. It's I don't know. I'm not very sure about the legalities of it.
I think what it is if you pass the Howey test, so
Mhm.
if it has these 4 criteria,
Yeah,
then they control it. It's essentially a security.
it's a security. Yeah.
Right. So if it passes this, then it's a security. If it fails this, then it's not a security. So if you have, let's say you have 3 out of 4, then you're not a security. So what? So
Yeah, and if
okay,
if you're not a security, that means
yes,
I can have an ETF essentially.
yes, I think that's what it is.
So
Or
Bitcoin has an
I don't even
ETF.
think that I don't even think that's what it is. I think what it is if it passes the Howey test, then the SEC can come after you for selling unregistered
Oh,
securities.
okay. So the contention here is okay, right? So sorry. So it's not a
Yeah,
prerequisite to not to fail the Howey test to be an ETF. That's not a prereq.
I think it's just you can have a security with a certain ETF, but if you're issuing it without getting SEC approval, then you're in trouble.
Okay.
So Ethereum essentially passes this, right?
No, it fails this.
I think
That's
it passes
why.
this, no, because it has all these criteria.
Oh, sorry. Yes, it passes it. Correct. Yeah.
It passes,
Okay.
yeah, yeah, it
Yeah.
passes
Yeah.
because it has all the criteria. Bitcoin doesn't pass this.
Yeah. So the SEC can't come after Bitcoin.
Yes, so because there's no common enterprise, there's no CEO, there's nobody controlling the code. It's consensus.
Mm-hmm.
Yeah, so Bitcoin doesn't pass the Howey
So
test. Okay,
any
yeah, yeah,
just extending that logic, then any proof of stake endeavor uh, will pass this.
we'll pass this. Yes.
So
Yeah,
any
gold
proof of
doesn't
stake
pass the Howey
coin,
test.
yeah. So any proof of stake coin basically
Any proof of stake, yeah.
passes the Howey test, which means that they can't actually do things like ICOs without the
Yes,
SEC coming after them.
yes, it's
And
not
yet,
allowed.
but it's done though. I mean, we all know ICOs happen. We all know, or they used to happen at least.
So
Um,
either I think eventually the SEC is going to come after them, and
mhm.
they're going to maybe arrest Vitalik, do something to the network. I don't know. I don't know. Who knows what's going to happen? But
Yeah.
the I mean, right now, I think it does fail the Howey test in their opinion. It still is considered a. Is it considered a commodity or security?
It, I think it's considered a commodity.
Is Ethereum a security? Generally not considered as a security, but it should be recognized as a security.
Yeah, but that's my point. Yeah. So
Yes.
that's why it's really strange to me
Oh,
because when
right. Okay.
BlackRock
I think I
says
confused what you were saying. Okay. Okay.
when
I think
BlackRock
we were going to the
says
same conclusion, but we were just
we're
looking
doing
at
it
it
in different
differently.
ways, yeah. But what I'm saying
Yeah.
exactly. So if BlackRock says, "Hey, look, guys, I've got a Bitcoin ETF, shiny new, took forever to get it approved, and now it's approved, and you can buy it. Brilliant." And then they back it up with 2 weeks or 2 months later, we now have an ETF for Ethereum, right? I don't know, but like Bitcoin and it's that basically to the layman who doesn't know the difference, they're going to think, oh yeah, that's okay, fine. Bitcoin's too expensive, for example, in fiat terms. I'm going to buy the other one instead. Exactly what happened if you remember the 2013 to 17 cycle about shitcoins going up. Like Litecoin was going through the roof because people were like, Bitcoin's too expensive. I can buy the next best thing, right?
Yeah.
I think it's created this atmosphere, possibly, and I haven't looked at the stats to how many people are buying Ethereum versus the Bitcoin ETF. The Bitcoin ETF has, I think, in history been the biggest ETF so far, right? So it's
Yes.
obviously done a lot of damage, and not damage, but it's obviously got a lot of buyers. What's happening with the Ether ETF, and it's just a bit problematic that they're done in the same, almost in the same way, like the messaging of it, which I'm
Yeah.
I'm not very sure of because, like we said, the Howey test kind of makes it very obvious.
Yes. I mean, it should. If you're genuinely looking at it from an objective point of view, then it should pass the Howey test because
Yeah,
now that these ETFs are coming out and they can potentially have millions of Ethereum,
Mm-hmm.
they can stake them
Yeah.
and they can earn cash flow.
Yeah. So
That's not good.
no, it's not. I don't. Yeah, I mean, and Gary Gensler, who was the chair of the SEC, um, taught the Bitcoin course at MIT. I mean, he must have got
Yeah,
this, right? If we can get it,
I'm
how
sure he
can he
did.
not? Yeah,
I'm sure he
yeah,
did. I'm sure somebody's paying him. Somebody's got some information on him, getting him to do
yeah.
this. Who knows?
Wow, Milky.
Right.
Anyway,
I mean, it could go anywhere. There could be a lot of things, but who knows? Maybe we're wrong.
yeah. Maybe we're
Maybe,
wrong. That's my
maybe,
point. Yeah,
maybe
maybe
we're
we
wrong.
like. Yeah, exactly. Maybe I don't get it. You know.
Yeah, yeah. Does that?
Anyway,
Does that? Of
um,
course.
yeah, just changing tack slightly. Sorry, I was going to ask you about. You mentioned I've been following your recent tweets about the real estate stuff, and you wouldn't believe how much in agreement I am with you. I'm a homeowner, right? I used to own my flat in Dublin, just outside of Dublin in Ireland, and I put that up for. We moved over to London. We settled here, so I was like, okay, let me rent it out, right? I mean, originally I wanted to just sell the thing and buy Bitcoin, but it's so hard for me to sell my own property in Ireland. Like, I'll tell you a little bit about the rental laws, and like I couldn't believe these things, right? So first of all, straight off the bat, I can't increase the rent by more than 2% every year. Straight away, I just can't.
Well,
Right? If I do, I'm breaking the law. So okay, what's inflation? Whatever imaginary number they do tell us it is, I guarantee it's not 2%, right? So that's I'm losing money. I'm losing fiat at least straight away. So I was like, okay, well, what if I ask these tenants to leave and leave the house empty? So turns out I have to give them a 6-month notice period to leave the house.
well,
If they had lived in the house for a period longer than 6 months, right? So if they were already tenants for more than 6 months, I had to give them a year, a notice of a year to leave, right? I mean, that's not practical because that means well, how can I not have control of my own property, right? I can't even, I can't set the price for it, and I can't even get the right tenants in if that's what I wanted, right? So I don't have that. Um, then I thought, okay, fine, let me borrow against the house and buy Bitcoin against it because I have significant equity in the house. To which I was told, because I'm no longer living in the same country, they cannot do that. So I can't even get equity in the house against the house. Then I was like, right, what if I take equity against the house to do repairs on the house, right? Surely that's an expense. I mean, I'm going to do it because I want to upgrade the house. Can I not use the equity to do that at an interest rate? To which they said, um, so we will need to see proof. We will need to see invoices of everything, right? Of your suppliers, of what the works you're doing. Are they compliant? Are they this? Are they that? Just loads of paperwork. And I have a full-time job and a family. I can't provide all that information to you. So the answer was basically, no, you can't release the equity. Right. Okay, finally, what if I just sell the house? What happens then? Again, providing you can get the tenants out, because nobody's going to buy a house with tenants in them unless you want to sell it to an investor. That's a short market, so you want to sell it to the retail market. The problem there is because it's no longer my principal residence, right? I now have to pay capital gains tax on selling my own house. Okay, so I don't even own my other house here. I'm renting here, but I'm selling something that has grown in value, and I'm hit by a capital gains tax, which is 33%. Okay, so a third of my profits go into that, so I can't sell it.
no, not
And
even
then
not even a third of your. Oh yeah, yeah, a third of your profits, and then
third
most
of
of
my
those
profit.
profits came from inflation.
Yeah, exactly. Right, and that's how exactly. So they inflate on the one end, and then they charge you capital gains tax on the other end, right? So, I mean, where are you going to go? So yeah, so sale wasn't an option. So then I wrote this article, and it was my biggest earner actually since I wrote this article, which was about you don't really own anything actually. I don't even own the house. I mean, look at the trouble I have to go through to something that's apparently mine. Oh yeah, sorry. And the kicker was when I rang the bank to ask them to give me my property papers for the house, right? So they charge me a fees of about €100 to get that. First of all, secondly, they won't mail it to me. They can only mail it to a solicitor. So my appointed solicitor who gets it, um, who has to keep hold of that for a month before they can let me have it. I have no idea why. Right? And this is like, and I'm there going, what is the point of the, how is this ownership? I mean, if this is ownership, then I don't want any of it. I'd rather own Bitcoin. Like I mean, like forget about the monetary gains. Like even if Bitcoin was to remain static from now on, it wouldn't give me any of the headaches that I had to go through in owning my own house. So obviously I couldn't put all that in a tweet to your response, but I was like, holy crap! I mean, I don't think people get this, and maybe Europe is like super high on the legalities on the on all this sort of government overreach, right? There's a lot of that here in Europe, and maybe not so much in the US or Canada. But I think we're gonna get there, man. Like these guys are gonna like that's the one asset that a normal human being can buy today, and I think that's also
Yeah,
going to be clamped down on. You know.
I completely agree. So I think what's going to happen is over the next little while, a lot of people are going to see that, okay, if you compare Bitcoin and real estate and they
Mm-hmm.
both have the same returns, what would you rather own? Which one
Bitcoin.
has the higher cost to maintain?
Yeah.
Real estate has the higher cost. Real estate, of course, you can get some yield, but even that's not keeping up with inflation. That's one
Yeah.
thing. And then there was something else that you said. Oh, there's property tax.
Yeah.
Imagine you stop paying your property tax for 6 months.
Madness. Yeah. No,
It's gone.
they'll take over the house.
Right. And these are this is I think one of the things that the legacy financial system has really built to
Mm-hmm.
ensure that they can keep lending more and more money. And
Yeah.
then there's also the fact that, I mean, if you think about it, all the rules and regulations that they have them to support the tenant.
Yeah.
So they have, so
Agree.
you have to give them 6 months notice. You have to do this. You have to do that. You can't increase your rent by 10%.
Yeah.
You have them to,
2% in my case.
oh, sorry, 2%.
Yeah.
You can't do all that. It's to protect the tenant. But the issue is that the financial system is designed to hurt the tenant, to make sure the tenant is giving you cash flow. So, I mean,
Agree.
people think that it's designed to help them, but it's really not, right?
Yeah.
When somebody has to keep, when if you have to keep increasing your rent every single month or every single year because your cost keeps going up, and
Mm-hmm.
you know for a fact that inflation is the real amount, and then you have to actually charge that amount increase every single year. You have to increase your rent by that. I think it's going to just blow up the system, right? Because people are
Mm.
going to see that, oh, my rent didn't only go up 2%, it went up 12%, or
Mm.
went up 15%.
Mm.
And my job hasn't paid me more. They haven't paid me 15% more. They've paid me 2% more because that's what
Yeah.
my cost of living has increased by. But that's the thing. Everything is tied together.
Yeah.
Inflation is stated to be 2%. The rental prices ceiling, the increase of the ceiling is 2%. Employers give 2% raises. So where's
Mm-hmm.
that difference going?
Mm.
The difference with we get better at producing things over time. I'm not sure if you know about what's his name, Jeff Booth.
Jeff Booth. Yeah. Yeah. Big fan of his work as well. Yeah.
Yes.
Brilliant.
So exactly. So his idea is that over time, costs should be coming down
Yeah.
because we get better at producing things.
Yeah. The
And
marginal price of production,
exactly,
basically. Yeah.
the cost of real estate should be coming down, but instead we're in a system where people have to keep increasing the cost. And
Yeah.
if it was up to the person who's renting the place, they could probably fund the purchase of a house, right?
Mm.
If their money wasn't being stolen from them, instead of having to rent, they could just buy a house,
Yeah.
right?
Yeah.
But in this system, it's completely designed to make sure that
I.
money is being funneled to the top, keeps
Yeah.
getting funneled to the top. Whether or not it's yours, whether or not it's your tenants, your money is being stolen from you. If they're only
Agree.
allowing you to increase your rent by 2%, you're getting taken advantage of.
Yeah.
Your tenant is getting taken advantage of. But then all of that is funneling to the top, and that's what real estate is built for.
Yeah. No, great. And I like to look at this again from a personal finance lens, right? Because I had to now make a decision. It's like I've been so used to living in the house that I own for like 7, 8 years. I never liked the idea of paying rent anymore. We moved to London and we lived quite, in a rentals are obviously insane as you can imagine. But I was like, well, hang on a minute. If I do all these calculations, I've actually come to the conclusion that housing or a roof over your head is just a cost, right? It doesn't actually matter who that cost goes to. Yes, it does on an infinite timescale. Maybe over 10 years you're paying too much rent, possibly, right? But there is a sweet spot. And I think my calculations tell me about 3 to 4 years, That's my sweet spot. If I can rent a place for 3.5 to 4 years, oh sorry, if my time span is 4 years, it doesn't actually make a difference if I'm renting or I'm buying, because effectively the same thing, right? So unless I'm going to live somewhere that I know I'm going to live for 4+ years, then okay, I might think of buying it. All right. So that's the first sort of decision we took. But then I was like, if it's just a cost, and the other thing rentals does, by the way, is that you always tend to rent something that you can never afford to buy, right? If you think about it, like when I go and rent a car, I'm going to rent, like, I don't know, Maserati, for example, because it's for a few days and whatever. I'll pay the premium, right? Because I can drive a nice car. Um, that's what we're doing with rent. I mean, if you ask me to buy the place that we currently rented, I can never afford to buy it, but I can bloody well rent it because I can meet that cash flow. It's kind of like buying something on installments, because you
Yeah.
look at that and you're like, oh, I can do that. But that's what housing has become, because
But then
yeah.
But then you never get to own it. When you buy something in installments, you eventually get to own it. With your house, you don't.
Exactly.
Like,
It's even worse. Yeah, yeah. It's a cost of use, basically. It's a cost of use. It's hiring. I mean, literally, it's renting, right? But then I was like, yeah, but like, okay, so obviously there's a certain quality of life we want to maintain. We want to have I don't know, a 2 or 3 bed house, and we want to have this, we want to have that, okay. If you put all that into a bundle, not even a wish list, like a reasonably a reasonable house that we'd like to live in for the foreseeable, we can't afford to buy that currently, right? So okay, so how about I rent it? And even if I did buy it, by the way, the rental price that I'm going to have to pay is equal to the market that I'd have to pay. Maybe it's up by about a couple of £100 a month, right? Maybe, but even that gets got with taxation, blah blah blah, all that stuff. It's actually not. You're not making a whole lot of money there.
no,
So
no, no.
that's one. That's the other problem. So now I'm like, hey, why don't I just stack as much Bitcoin as possible and just live in the rental house that we actually love? I mean, which you can never afford to buy. It doesn't matter. It's a cost for me either way. I got to pay the bank or I got to pay my owner. It doesn't matter. I just want to live in a house, and I don't have to worry about any other responsibilities. If there's a crack on the roof, the washing machine's broken, I ring my owner. Right, that's what I do,
Yeah,
and I just get by with it. I don't need to worry about it. I don't have to worry about furniture, for example, which is a huge, it costs about 10 grand to put in furniture. Like all of that stuff is out of the equation. And yet, when I voice that to, let's say, real estate people, they're like, but buying the house is like the pinnacle of achievement. I'm like, I've already bought the house and I can't even do anything material with it, right?
yeah,
How is this progress? How is this like the sort of the epitome of your life? I mean, to get the American dream, right? Buy a house and own this. Like, it doesn't even make sense, because all that capital you've tied up in a house in a deposit, imagine you just put that into Bitcoin and just leave it and do nothing and then rent in a house that you can't afford to buy. Over 10 years, my argument is that the guy doing that is going to make a shitload more money than the guy owning the place he lives in, you know?
yeah. Completely agree. So I did the calculations for this. I don't know if I
Okay.
still have the spreadsheet available, but I think the difference was something like if you were to put $60,000 into a house
Yeah.
versus $60,000 into Bitcoin, Bitcoin rises at 30% a year, 40% a year. Your
Hmm.
house rises at 3 to 5% per year, but then you get leverage. So let's say
Yeah.
4% with
Yeah.
leverage, you get you get 20% increases in your house because of that leverage. But the thing is that
Yeah.
you're taking a massive risk.
Yeah.
Bitcoin, if you put $60,000 into Bitcoin, that Bitcoin is going to be worth something like $100,000 or $600,000
Yeah.
in the next 10
10
years
years.
or so.
Yeah.
I don't know the exact numbers, but with the house, it's going to be worth, your total equity is going to go from 60,000 to 188,000. So
There you go.
instead of from 60,000 to 600,000, you're going from 60,000 to 188,000.
Yeah.
That doesn't make any sense.
It doesn't. It really doesn't. And then I think it's the mindset of people not wanting to pay someone else for a roof on their house. That's what's holding them back from doing this, because they
Yeah.
think that the costs are passed on to the renter, which they are. But even then, it's a better deal.
Yeah.
Even then, it's a better deal. And that's what they don't see. They just
And
stop
then
at that first junction.
a lot of the people who are saying that are the ones who actually own homes and have tenants. Oh,
Mm.
renting is a waste of money. Then why do you have tenants wasting their money?
Exactly.
Right? And
Exactly.
it doesn't, I mean, it doesn't go both ways. But I don't think a lot of people think of it that way. I think a lot of people just see it as this is how I've been raised. This is how my
Yeah.
parents told me. This is what my grandparents told me. This is what my great grandparents told me. But back then, Bitcoin didn't exist. So
Yeah.
whatever your
And
grandparents told you,
Exactly. And
It's
back then,
almost irrelevant.
apartments didn't exist either,
Yeah,
right?
yeah,
So when you own, I don't know how it works in the place you live, but we get like a freehold tenancy or a leasehold, right? Basically, it means
yes.
you own the
Same thing in
land.
Canada. Yeah, yeah,
Yeah. So there you go. So okay, if I was to buy a £1 million penthouse, right? And that's like the pinnacle of achievement for any middle class working person. You don't own the land anyway, right? So again, it's like if I had done that 50 years ago and I owned the land on which the apartments were built on, that's a game changer. Not
yeah,
buying the top floor of that apartment. Do you know what I mean?
yeah,
But that's synonymous now with like a house is a house. Like they assume like how one Bitcoin is one Bitcoin is like a house is a house. It doesn't actually matter because if
yeah,
it's an apartment or whatever it is, it's a house and you've got it and well done you and you know you're on the path to progress. But at what cost? Like nobody really
yeah.
looks at this, you know?
That's it. I think the old mindset of real estate is the best investment is only reliant on fiat continuously
Yeah,
being printed. If fiat is no longer being printed, then real estate doesn't work anymore. You can't keep charging higher and higher rents because where's that money going to come from? You can't keep expecting the value of your house to keep going up
and keep
because
going up.
if it goes up too much, more
Yeah,
houses will be printed essentially and added to the economy. The cap of housing is only reliant on our resources. If we have
agreed.
the resources, if we have the energy to build more houses, if we have the labor to build more houses, then we'll do it. But a lot of
Yeah,
that energy and labor, I think this is something that really blew my mind too. A lot of the energy and labor that we should be using to grow food, to build better houses, to think of ways to build better houses, to think of AI to build better houses, a lot of that energy and resources is going to creating more money,
yeah,
right?
yeah.
And that's
That's
just
shocking.
destroying the entire financial system. Basically,
Yeah,
like the financial system is destroying everybody's lives essentially,
yeah,
and it's
yeah. And I
because
think Jeff Booth was saying that in one of his podcasts as well, where he was talking about how I think it was in the 70s, Sears, you know, the American supermarket,
yes,
could deliver a house to your land
yeah,
for
yeah, yeah,
$2,500. Can you
yeah,
imagine that? Can you
it's
imagine that
crazy.
today, actually? Like you own a plot of land or a farm or whatever, and you just simply buy it off Amazon Prime.
Yeah,
Like, where would the real estate moguls go if that's the world we lived in? But you see, that can never be the world we lived in because of your point, right? The finances are like the incentives are just completely messed up.
yeah, that's it. Because there's an incentive today to ensure that the supply of real estate remains scarce.
Mm.
Something like I think it was something like 40% of Canada. So Canada's Prime Minister Justin Trudeau,
Yeah.
40% of his cabinet owns real estate as an investment.
Well, there you go.
So
Yeah.
why would they pass some regulations that screw over their own financial situation? They're
Yeah.
not going to do that,
Yeah. Exactly.
right?
Exactly.
It,
Exactly.
it's all just artificial.
Yeah. Yeah. So yeah. Yeah. Absolutely agree.
Yeah. So okay, I think that was a really good conversation. I think I'm gonna close it off here. Maybe
Yeah.
maybe one last question I want to ask you. If my subscribers, if the people watching this want to find you, where can they find you?
Yeah. So I'm really active on Medium and X. I write a lot. Most of my blogs are on Medium, so I'm called Embracing Discomfort on Medium. I have a bit of an alias there, but I'll share the link possibly maybe in the video or on the tweet whenever you put it out.
Right. That's about it. Make sure you guys follow my friend here. Where I think there's a lot of people creating a lot of great information, great content, and this is one of those accounts.